welcome to Ainsley News. It's Monday, the 25th of January. For those that did make it to work today, well done. Everyone enjoy their holiday tomorrow, of course. And today we're talking record silver inflows versus smart money equities exit. Whilst the price of silver has been chopping between US $23 to US $28 since its big surge from $18 to $29 last July and August, total holdings backing all derivatives have likewise been reasonably flat, with inflows only just outpacing outflows. However, now that we have the certainty of the US election result behind us and the economic reality of more fiscal stimulus, expectations of reflation and inflation, and green initiatives needing silver's unique properties, we've seen large precious metals inflows recommence, particularly into silver. Last week saw the largest one-day derivative capital inflow in over 8 years, mostly into the silver ETF giant, SLV, $500 million or around 20 million ounces or 600 tonne in one day. For perspective, global silver production equates to around one-tenth of that figure per day. For the week, the figure was a staggering 29.3 million ounces or around US $750 million. The chart we're going to show next shows both the holdings for these funds and the price of silver. You can see the correlation. Here's that chart here for transparent silver holdings. Gold saw 117,000 ounces of net inflows worth around $220 million by comparison, but again shows an uptick in net flows since coming off last year. To put these both into perspective, the following chart we're going to show you is going back to when ETFs, etc., were just born. Here's that weekly transparent silver holdings again, and also gold, just here too. So who's buying all this silver and gold? There is a growing concern amongst the investor space about the sustainability of this global, but US in particular, share market bubble. Deutsche Bank latest investor survey paints a clear picture, with 37% of respondents strongly agreeing to the statement, "Currently there are many bubbles in financial markets," and 52% slightly agreeing. Here's that result from that survey here. The buyers of all this silver might just be the guys in charge of those bubblicious shares. If ever there was a rubber hits the road warning sign, then surely this next chart we're going to show you must rank high. This year we've seen a new surge back to near highs of company buybacks on the S&P 500. At the same time, the executives running these companies are selling their shares at the highest monthly rate since data began in 1988. They are bailing out personally and buying back with the company account that just inflated the price of these same shares. Here's that chart here showing that increase in ratio with insider sell versus buy ratio. As a reminder of some investment fundamentals, when you buy shares in a company, you are making a bet on the management of that company delivering future value to you. So here's point one, they are bailing out. And point two, those companies are at valuations rarely ever seen before, meaning the risk of future earnings justifying your investment are extremely low. Here's yet another chart here showing the S&P aggregate index and medium stock valuation metrics versus history. Take a second to read through that one. Previous crashes abound with examples of the smart, sophisticated money bailing out just before, and indeed into the hands of the hapless, unsophisticated investor. Well, that's news for today. We hope you enjoy your Monday. And if you are taking a break tomorrow, enjoy that too. Remember ainsleyBullion.com.au for all things physical, Ainsley Wealth for all things cryptocurrency, and goldsilverstandard.com. Cryptocurrency built by Ainsley and backed by real physical gold and silver, stored at Reserve Vault. We'll catch you on Wednesday for more news.